Good morning, it's Ron Brown. It's Monday, September 5th, 2016. I hope you're all having a safe Labor Day weekend. The weather hasn't been cooperative on the East Coast or in Florida, but other than that, I hope that everyone's safe. I just finished a webinar series yesterday that ran for 6 weeks. We did it Tuesday and Thursday for an hour and 15 minutes after the market closed, and then I did a 2-hour session yesterday just to wrap it up. It was my initial webinar after Ian's death. He passed away Memorial Day weekend, and here we are at Labor Day weekend already. I used a totally different technique than anything I've ever done in the past or we ever did, and it's called risk-based trading. It's position sizing based upon the amount of risk you want to assume on a trade, and then you let the trades come to you based upon buy stops. Now, HGSI is set up for this perfectly because we have the advantage of not only market analysis but group analysis, VPA, volume point of control, and so on. So it's set up beautifully. Anyway, I don't want to spend much time on this, but this is the results from the beginning. You can see that I had several trades stopped out. These are all stopped out right here, and my losses were, my risk, I should say, on each trade was no more than $250. So some of the trades I got a better fill on, and then I got stopped out for less than the 250. Well, in fact, every one of them were less than the 250. Now, these are still open trades, so the bad trades, or the ones with in red, I got stopped out of, but you can see that I've had some very good trades on the positive side. So that the equity curve is right here. These are the actual numbers. The gross is $24.48 on a $25,000 account. Net profit and loss $23.45. Win percentage 50%, and I did 10 trades. So at $250 maximum risk per trade, the most I was risking was $2,500 for the total of the 10 trades. Now, if you want to look at this as risk compared to profit, I'm going to divide this number, the net profit and loss, not the gross. This is after commissions, and I've taken the commissions out already of the trades that I'm still in, but I'm going to divide this number, 2345, divided by 2,500, which was my maximum risk, and you can see that the reward on risk is 0.938, or almost 94%, and this is for 6 weeks. Tremendous numbers, and if this is sustainable or anywhere close to that, or how about 25%, or how about 10% for 6 weeks, it would be a tremendous approach. Now, I'm not going to get into that approach at all here. That is for the webinars, but I do want to show you that if I go to the tracking sheet, that the actual return on equity over that time period, this would be on equity, 9.38%, and that number is right up here. Here's the gross. Once again, here's the net, and I began with $25,000. This was real money. It wasn't paper trades. It's a small account. Some of the students did very well. They risked a lot more money than I did. Some didn't trade, but those who did trade, as a rule, made a fair amount of money during the course of the webinars. Now, I'm going to do another series probably beginning in October. And the reason is I'm going to be in San Francisco, I believe it's the 16th of October, and I'm going to make a presentation about HGSI to a dinner of members of the Technical Securities Analysts Association of San Francisco. I'm going out for my niece's wedding, so I am combining a trip. Also, at some point, I just haven't had a chance to get together with Gil. We're going to do a combined webinar on using HGSI, and hopefully I'll get my portion of it put together here sometime this month. And during that webinar, I'm sure I'll talk about risk-based trading, what I'm doing now. If you really want to learn about HGSI, you need to attend the webinar series. But anyway, that's enough of that. What I want to do today is I want to go to all securities. I'm going to just take a look at the market, and I'm going to go into an older view. I'm going to go into views. Ian Woodward and Ron Brown, we put these together a long time ago, and they evolved over the years. I'm going to go down to the WB Smart Groups, and since we've been in such a strong market, I'm going to click on the 52-week high. This is the Woodward and Brown 52-week high Smart Group. You can see 229 securities hit a 52-week high based upon this. There were more securities hitting that high, but they have to be in a group, have to have a ERG rank of greater than 0. This is the days since it hit a 52-week high equals 0, so they had to hit a 52-week high today. That doesn't necessarily mean that they closed at their 52-week high, but they hit it today. Dollar stocks trading at least 100,000 shares. So 229 of them. What I want to do is go to my file menu. I want to make a group from the list. 52-week high. Wish I could type. It's early in the morning today. 229, that's going to include the index. I'll just leave the index in there. And let's, in this instance, let's just go ahead and generate an index and see if I can. Okay, here's the 52-week high index today. This is a chart that I just made up this morning. Nobody has it. It's I'm using it for illustration purposes. You can see that the 52-week high, this group hit the 52-week high on Friday, and with the wick here, it's down 0.5%. That means nothing here, though. So percent close from the 52-week low of this index is 56.5%. So these are obviously strong stocks. I have the my VPOC 1010 down here. These dark gray lines indicate when there was a VPA flag generated, and this is just accumulation up at the top. Okay, so let's get back here. I'm going to click on raw combo. Now I'm going to go, I'll just stay in the W&B groups because you all have these files. Go down to my top-down process views and click on number 11, or it's also down here in the top-down analysis. So what I'm looking at here, and I'm sorted on raw combo, I am sorting on these groups according to the industry percentage price change one day, and you can see that all of the groups are lined up. So these are stocks in groups that are hitting 52-week highs today. Now it's kind of hard to look at it this way, so I'm going to do it this way. Type in IND, and this shows me that the largest group hitting 52-week highs today were the banks. And there are several groups with just one stock in here, so there's no reason to make industry groups out of this. Now, the next thing I'm going to do is look at a few of these stocks. Here's one that I'm currently in, have been since July 12th or something like that. Let's just take a look at this stock right here. FIVN, it's 59 Inc. Bought it as it pulled back from a little move. Notice it's above the 20-day, 50-day, 100-day, and 200-day exponential moving averages, and it continues to go. It hit a 52-week high today, and it's or on Friday, I'm sorry, and it's down 0.2% from the 52-week high. Look at the return on this from the 52-week low, 356.0%. Now, you know, it's over the past few years, it's been fashionable to say that buy and hold is dead. Well, that's just not true. And this is just one of those stocks that proves it. Now, let's go into the designer. And this is a feature that Matt put in a few months ago. So I'm going to type in, put my caps locks on, FIVN, and then I'm going over here to the right, this folder. If I click on the folder, it's going to find all of the times this stock has appeared during the year. Now, I keep a lot of data every day, and I'm just mainly interested in when it appeared in a few of these smart groups. And the smart group, look at all the times it appeared in Woodward and Brown and so on. I want to close that up. I want to concentrate on some more focused views. But you can see how many times it appeared in Woodward and Brown smart groups, and also Morales and Casher. Those are the only ones that I track. Look at the number of times this stock appeared in stocks and groups moving to the upside, and the dates. Now, back here in May, it appeared multiple times. June, it appeared multiple times. July, it appeared a few times, and then August, it appeared multiple times. Since I was involved, I got involved, I believe, on this date, the 12th. Let's just go look at the, I'll bring up a window here and a crosshair. Okay, July 12th is right here. So it broke out there. Well, let's go, let me go check and see what the entry date was. I'm not really quite sure. $7.12. Okay, that's the date. So I actually bought it on this move up, and on the risk-based trading, actually I'm not buying these impulses anymore. I'm waiting for it to pull back and then enter a little bit later. So the pullback in the future with this risk-based trading, I would be buying it right here. Why did I buy it on this day? Because it broke past this area right here. I picked it up. I noticed it was basing, and I wanted to break past the high on this day. Let me zoom in on this a little bit and get back to the 12th. Okay. I had noticed it. It was in stocks and groups moving up also. I wanted to clear this resistance area right here. So I had a buy stop in. And you can see that it wasn't a successful trade at first. But I used this area here for my stop. I gave it a little room, and I just sat on it for a long time. Didn't do anything for a long time. And then it took off. And patience is sometimes the name of the game in this crazy business. But it took a long time, and now it's really starting to accelerate. Let's go look at it on that the spreadsheet. And I'm going to scroll over to the right here. This is based upon the closing prices as of Friday. And here it is right here, FIVN, this column right here. It's up 27.88%. And you can see, looking at this column, that the most I ever risked was on HBP, or that was my biggest loss at 7.79%. But you can see all the other losses are under 7%. When I place an order, I also place a stop. If I get stopped out, that's just the way it is. Okay, anyway, that's just one example, but let's look at this a little bit further. So it's been in the stocks and groups moving to the upside. I want to go down here. You can see that it was in the leaders group, the leaders combo, and it appeared in the top 50 GIR in June several times, and then on August 2nd it reappeared. Let's take a look at August 2nd here. Okay, so it appeared right there, dipped down a little bit, stayed above the 20-day exponential moving average, and then it finally started moving up here. There was a negative VPA flag here because of the wick. The upper wick was so large, and you can see that volume was heavy on that day, so it generated a negative flag. But the next day it moved up, and then we had a couple more negative flags, and it drifted right back down again. I didn't know if this thing was going to go or not, but ultimately it did, and patience was the key there. Notice that down here at the bottom, the VPOC 1010 went positive on that day. It stayed positive for a couple of days, and then it drifted down. But then when this fired again on this strong candle, it stayed positive and stayed that way all the way over to this point. It's a very sensitive indicator, but I am using a trailing stop on this, and when I attain a certain level of reward, I just move the stop up, and it didn't get stopped out. Okay, let's take a look at another stock, MOMO. This has been really hot lately, and I want to take it into the designer. Going to get rid of this one, turn that folder off, type in MOMO, then I'll hit the folder. Okay, you saw it recalculate there, and you can see that MOMO started appearing in the top 50 back in April. Didn't do much. Then in August, on the 1st of August, it showed up again, and then the 15th it became a regular stock in the top 50. So let's go look at the 1st and the 15th. There would be the first right there on that effort to rise. But you can see that it's the VPOC 1010 went positive clear back here. Still on this effort to rise. And the following day, this stock never challenged the low here or the low here. It just based sideways in a very tight formation. And when's the next time it appeared? It appeared on the 15th. And there's the 15th right there. A little bit of a shakeout, stayed above the 20-day exponential moving average, and then it drifted down here. This was a heavy volume day, a lot of activity, shakeout, drifted down a little bit, and then buyers stepped up, and it's made a tremendous move over the past few weeks. Now, this is a stock I did not take. I saw it appear many times. And I didn't take it for a very, very bad reason. And a year or two ago I lost, or a year ago I believe, I lost money on this stock, and I just didn't pay much attention to it. And I should have, because it had everything going for it. It was appearing in these groups. Look at this group moving up. I mean, the VPOC's positive, several positive VPA signals, and I just missed it for psychological reasons. Not a good excuse at all. Let's go back to the designer. You can see that it had multiple VPA flags over this time period. It started appearing in the top 100 raw combo stocks. It didn't make there until August 24th. So the move was on. Let's just take a look at the 24th to see when that was. Right here. It made it on a negative day, but it still had a nice run since then. You can see that it made a lot of leaders groups in the W and B. Scroll up here. This is the one I want. The stocks and groups moving to the upside. You can see that it was appearing throughout July and also in August. The stocks and groups moving to the upside is these are the groups that Gil Morales looks at all the time for potential trades, because when these groups start moving, they're going to show up here. They may not show up the first day, but they will show up soon. Let's just take a look here at July 7th. Actually, let's go to the 11th. July 11th, right here, is where it started appearing. Let me get this box out of the way. You can see that the moving averages were all bunched together, and then it went sideways, and it was still there on the 18th. So it was basing sideways, but it was appearing in the stocks and groups moving up, and you can clearly see why, because the group was moving up very sharply. And let's get down here to, we'll go to the 26th next. Still basing sideways, but yet it was appearing in the stocks and groups moving up. And then on this day, the 1st, you can see that it appeared in both groups, and that was the day that it started making its move. Base sideways throughout here, and this is from the 3rd through the 12th, and you can see that it was in stocks and groups moving up several times during those days. So just because a stock is not moving up, it does not mean it will not appear in here. If the group's moving up, the way I set the combo up, either or, if the stock or the group is moving up, most of the time these will start appearing in those groups. Anyway, I'm going to end this video. I don't want to take up everybody's time. I just wanted to show you some of the power of HGSI, a few of the stocks that, well, one stock I'm in and a stock I missed. But there are many examples. With 228 securities hitting 52-week highs on Friday, we're in a strong market. And many of these stocks, the application software stocks in particular, have been showing up in the top 50 GIR for quite some time. Along with internet media, communications equipment has been very strong. Been showing up multiple times in the top 50. Semiconductors have dominated the top 50 and so on. Anyway, that's it for this week. Just wanted to show you a few things. Thank you for listening, and have a good rest of your weekend.